Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarte, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Hello, welcome to another episode of Real Estate Power Play. I am your host this week, Mark Monroe, and I'm super excited to have Jay on. Jay, how you doing? And why don't you kind of introduce yourself to the listeners? And I know you're in North Carolina. We just talked about that briefly, but I've seen you on social media for years, and this is the first time we're really kind of connected. But how you doing, Jay?
Mark, thank you so much. I'm doing fantastic. Thank you so much for inviting me to come along and talk about what I am so passionate about, and that is private money for real estate deals. The reason I'm so excited about private money, and when I say private money, I'm not talking hard money. I'm talking about getting funding from just ordinary, people from their investment capital and or their retirement funds. But I'm so excited about it because when I learned about private money and how it works all the way back in February of 2009, that's when I started raising private money. Mark, I've never missed out on a deal. I've never missed out on a real estate deal for not having the funding. And it's just been an enjoyable journey. I never ask for money. I never pitch deals. And if time permits, I'll share with you and your audience how in the world can you get millions of dollars available in private money funding without ever having to ask for money and never having to pitch a deal?
Like that. So Jay, once you kind of bring us back, how you got into real estate, where'd your journey start? I mean, you've been at this quite some time.
Yeah. Well, it started when I was born. And here's what I mean by that. My father is Wallace Connor. He's turning 92 years old in just a couple of weeks. He's still doing a development, a housing development right now at 92 years old. I guess when I grow up, I want to be like him. But for years, his company, the Connor Corporation, was the largest retailer of manufactured housing, mobile homes, if you will, in the nation. And so I grew up in a family with a father that I was exposed all the time to helping families own affordable housing. And I was in that industry, grew up in it. I was in my father's company. And until the early 2000s, 2002, 2003 to be exact, the financing, the consumer financing for that product, for mobile homes, trailers, manufactured homes, whatever you want to call them, went away. The whole industry fell out of favor with Wall Street. And at that time in 2003, we had 65 locations, $22 million of wholesale inventory of that product, and no way to sell it. We almost had to file bankruptcy. And I just knew 10 years prior to that, if I ever got out of mobile homes and manufactured housing, I wanted to get into single family houses and start flipping houses. Now, that was back in the day, Mark, prior to HGTV even being on TV and being sexy and all that. So it was in 2003 where we shut down the mobile home manufactured housing company. And my wife and I, Carol Joy and I, we started on this journey of investing in single family houses. And back in 2003, when we started, I didn't know anything about private money. Never heard of private money. Never heard of hard money. All I knew to do, Mark, was go to the local bank or mortgage company and get on my hands and knees and beg and apply and fill out applications to borrow money. That's all I knew to do. And that worked okay. That worked okay until for the first 6 years, from 2003 until January of 2009, that's when everything changed in January 2009.
No Wall Street capital for about 2 years, if not maybe 3 years, but definitely 2 years. Wow. I remember those days. So you needed cash. Cash was king during that time.
Yes, it was. And so I called up my banker. His name was Steve. He had been funding my deals for 6 years, 2003 to January 2009. And I told Steve about these two houses that I had under contract to purchase. I thought I still had a line of credit at the bank when I put these houses under contract. I called up Steve and told him about these two houses. And Mark, I learned like that over the phone that my line of credit had been closed, shut down with no notice to me whatsoever. And I said to my banker, I said, Steve, what in the world are you telling me? My line of credit is shut down. I've made my payments on time for 6 years. We've had a great business relationship here. What's going on? Steve said, Jay, don't you know there's a global financial crisis going on right now? I said, no, Steve, but you just gave me a financial crisis. I don't have a way to fund my two deals. So I hung up the receiver on the phone and I sat here, Mark, and I sat here at my desk for a minute or two and I thought to myself, and I want to share with you and your audience a very powerful question that I asked myself that changed everything. And you know, the power is in asking the right questions. And in fact, this question that I'm going to share with you and your audience that I asked myself, this question will help solve any problem that anybody's got going on. And by the way, these people running around saying, oh, every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. Now, the problem became an opportunity, right? But at that point in time, it's a problem. Here's the question, Mark, that I asked myself. I said, Jay, the power's in the who, not the how. I said, Jay, who do you know in your network that can help solve your problem? Well, you know, it's funny, Mark. When I asked myself that question, I immediately thought of a dear friend. His name is Jeff Blankenship. At the time, in 2009, he lived in Greensboro, North Carolina, and he was investing in single-family houses. I called up Jeff, and I told him what had just happened on that telephone conversation with my banker. And Jeff said, well, Jay, welcome to the club. I said, well, I'm not sure I want to be a member of that club, but what club were you talking about? Jeff said, well, I just got cut off from my bank last week. He said, they're not funding my deals anymore. I said, well, Jeff, how are you going to fund your real estate deals? He said, well, have you ever heard of private money? I said, no. He said, have you ever heard of self-directed IRAs and how ordinary people can take retirement funds that they've already got and transfer them over to a self-directed IRA company and then lend that money out to us, and the money and the interest we pay them is either tax deferred or tax free? I said, Jeff, I don't have a clue what in the world you're talking about. I said, what is private money? He said, well, there's this gentleman down in Jacksonville, Florida, by the name of Ron LeGrand. I said, well, who is Ron LeGrand? He said, I don't know.
Everybody knows him now. Well, us old timers, I shouldn't say old timers, but exactly. Everybody knows Ron. But go ahead.
I said, who is Ron LeGrand? He says, well, I'm not sure, but he can teach us about private money. I said, well, what is it? Jeff says, I don't know, but Ron LeGrand says we can get a lot of private money really, really fast. I said, okay. So you know what, Mark? Jeff and I went to my very first real estate investing conference in February of 2009 after being in this business for 6 years, because I was just relying on my mobile home business experience to, for what I was doing with single family houses. So I went to Ron LeGrand's conference to learn about private money, and oh my lands, did I learn about private money.
I started his stuff in the late 90s, Ron stuff.
Oh, wow.
Way back.
You started way before me. And so here's the thing, Mark. I learned about what it was. I came back home and I put my opportunity together that I was going to do what? I was going to go about teaching, and I put on my hat, figuratively speaking. I put on my private money teacher hat. And I just went about sharing with people in my own network, people I go to church with, in the Rotary Club, in Business Networking International. I just started sharing my opportunity that I put together. And I just started sharing what private money and private lending is. And I was able to raise $2,150,000 in less than 90 days in my little small market. My entire market is less than 40,000 people as to where I invest. And so I had over a couple of $1 million in less than 90 days. And Mark, I want to share a really, really important secret, if you will, secret sauce, a very important part of the strategy that I use to raise all this money. And it's very different. It's very different from what most real estate investors hear. Now, Mark, I'm going to take a little risk right here. I think I know what your answer is going to be, but I'm going to take a little risk. Here's the question. Have you ever heard the guru on stage teaching new real estate investors, and they say something to this effect? Oh, just get the deal under contract. The money will show up. You ever heard that?
We all do, all the time.
That's the most stupid thing I ever heard in my life. I mean, you get a deal under contract. I mean, like, is a drone going to come flying over your house and drop a bag of money on your front porch? Or does money have, sometimes they'll say, oh, money finds good deals. They'll say that. Money finds good deals. Y'all, that is asinine. That's stupid. I mean, how stressful is that to get a deal under contract and you don't have a clue where the funding is coming from? So I reverse that. It makes just sense to me, common sense. Get the money lined up first without any kind of deal attached to it, and then deliver on your promise. So that's a critical part of my strategy. Separate the conversations between teaching or offering your opportunity of how people can earn high rates of return safely and securely. What interest rate are you going to pay them? What's the length of the note? How they can get their money back in case of emergency? What's the maximum loan to after repaired value? All that. And I mean, here's a writer downer. Desperation has a smell to it. Desperation has a smell to it. If you're talking to a potential private lender in your own warm market, your network, and you're talking about a deal that you need funded, you already sound desperate without even trying to sound desperate. So separating those conversations between teaching or offering the opportunity, the interest rate, et cetera, and then come back with a deal for them to fund. So Mark, I want to do a quick little role play, and then I'm going to turn it back over to you because I got on a roll here. Sorry, I got on a roll. But so let's do a little role play here, Mark. I want to share with you and your audience right now how I get 100% of my deals funded without ever pitching a deal. You see, the traditional mindset of real estate investors or borrowers is they think that whoever's loaning the money makes the rules. I mean, that's what all of us think. I mean, we think that you go to the bank, you go to the mortgage company, they set the interest rate, they set the frequency of payments, they set the maximum loan to value. Well, turn that upside down, and instead of applying for a mortgage, hey, I got great news for you. You're already approved. There's no application. There's no credit scores. You're offering an opportunity. I got 47 private lenders, individuals, ordinary people that had what I call lazy money. Lazy money. It was not working for them. They were not earning a high rate of return safely and securely at the local bank, or they're sick and tired of the volatility of the stock market. So let's do a quick little role play right here, Mark, between you and me. And I'm going to share the exact script right now as to what I say over the telephone. We actually still have handsets here in North Carolina. What I say over the telephone, that gets 100% of my deals funded every time. So let's do a little setup. Mark, let's do some assumptions. Let's assume that you and I have known each other for some time. We're good friends. Let's assume we go to church together. Let's assume that I had a little conversation with you about my private lending opportunity. And I learned in the conversation that you had $150,000 in a 401k at a previous employer that you haven't moved over, and it's not doing anything for you at all, so to speak. Let's also assume that I introduced you to a self-directed IRA company to where you moved that $150,000 over to the self-directed IRA company with no tax consequences, no penalty, and you moved it over because you love the program and the
And what I really love is the open checkbook IRA. That's what I really love. But go ahead.
That's even quicker. Yep. And so you've moved that money over, and now you're waiting for what I call the good news phone call. So here's the exact script. I call up Mark. We have a little chit chat on the phone, and here's exactly what I say to Mark, or one of my private lenders, to get my deal funded. I say, Mark, I got great news for you. I can now put your $150,000 to work. I've got a house in Newport, North Carolina that I just put under contract to purchase. It's got an after repaired value of $200,000. The funding required for the deal matches up to what you have to invest, $150,000. Closing is going to be next Tuesday. I'll need for you to wire your funds to my real estate attorney's trust account by next Monday. I'm going to have my attorney email you the wiring instructions. That's the end of the conversation. The most stupid thing I could do is ask Mark, do you want to fund the deal? Of course, Mark wants to fund the deal for 3 big reasons that Mark, in this illustration, wants to fund my $150,000 deal. Number one, Mark already trusted me to move his money over to the self-directed IRA company.
So let's back up a little bit. How do you have that conversation where you get them to get the capital over in the IRA ready to go? What's that look like? Because that's the hard part where a lot of people have that conversation, like they don't know how to. And you made a good point that you are the investor, you're in control, and people are afraid to ask, like, oh no, I'm afraid to ask my uncle for some money, or you're the restaurant owner where I go to, he knows me really well, or even at my gym, I know like a physician. So how do you have that conversation there? Because that's it's great getting it and funding the deal, but what's that look like?
Well, the first step is teaching them the opportunity. That's the first step, is just sharing the opportunity. Like, I've been paying my private lenders 8% ever since 2009. 8% in first position, 10% in second position. They know I'm not going to borrow more than 75% of the after repaired value. I did not say purchase price. I always bring home a big check every time. I always bring home a big check when I purchase. And that's sort of a double check. If you can't bring home a big check from the closing when you purchase, you're paying too much for the property. And so I teach them how they can get their money back in case of an emergency. I give them a 90-day call option in the promissory note. They know that I'm not borrowing unsecured money. I'm going to back that purchase. I'm going to back that promissory note with, here in North Carolina and Texas, it's a deed of trust. Most states call it a mortgage. So we're not borrowing any unsecured money. We're securing their money. We're naming them on the insurance policy as the mortgagee. So if there's ever a claim against that insurance policy, the check is made payable to them and to us. So it's all about serving and teaching them and showing them the opportunity. And then if they have retirement funds, they could just be using investment capital, liquid funds. But if they have retirement funds and they're not happy with what the returns they're getting on the retirement funds, then what do? I do a 3-way call or a 3-way Zoom with my representative at the self-directed IRA company, and now they take over. and they hold their hand on getting the money moved over to the self-directed IRA company. That normally takes 2 or 3 weeks. And then the private lender tells me when they've got the funds ready, and then I put their money to work.
Love it. Love it. It's all, there's so much capital out there. I mean,
well, there's more
so
money
much
than there are deals.
Yep.
Yeah.
There is.
So back to the 3 big reasons why you, Mark, in our example, want to fund my deal without me having to pitch the deal or sell the deal. There's no pitching here. 3 big reasons. Number 1, you had moved your money to the self-directed IRA company. Number 2, you know I'm not going to bring a deal for you to fund unless it matches the criteria of the underwriting that I already taught you. You know that I'm not going to borrow more than 75% of the after repaired value. Well, in my phone call example, I told you the after repaired value was $200,000 and I'm borrowing $150,000. That's 75% of the after repaired value. The 3rd big reason that Mark wants to fund my deal in this example is he's not making any money. He's not making a return. He's not making any interest return until I put his money to work and get that invested for him. So Mark is looking for me to deliver on my promise and the opportunity that I told him about.
I like that. It's all about that. It's a network. Now, one thing I do want to point out, and maybe you can mention it, you said some key things there about who you know in pitching the deals and raising capital. Want to touch base if you don't know the person about like how to like, what if I want to go out and start talking to people that I don't know, that's not in my network or family. Typically that's where you want to get it, is in your network and your family, because that's where we all start raising capital. But there is some regulations there that they have to be careful of.
There's no regulations with asset-backed securities. Where the SEC comes into play is if you're raising money for a fund. So if you're raising money for a fund and you've got a real estate attorney that's drawn up a private placement memorandum, and now individuals are investing in that fund, the SEC is regulating you, right? Got to have the private placement memorandum. But everything we do in the world of single family houses, it's asset-backed debt. They're getting a promissory note. They're getting a mortgage or a deed of trust, right? And so it's a private lender being secured by that property. Now, one thing you just asked a second ago, Mark, was how about talking with people you don't know? Well, I don't talk to people I don't know. So how do we answer the question of, well, you're going to run out of your own contacts sooner or later in your cell phone, in your email. So what I teach and coach other real estate investors is how to grow your network and explode your network overnight. How do you grow your network? So you see, everything all the private money I'm borrowing is relationship based. There's a relationship in place before I even talk about my private lending opportunity. I can tell you one of the quickest ways to blow up your network, and that is get involved in your local Business Networking International, BNI. Even little old Morehead City, North Carolina, population 8,000. We started a BNI back here all the way in 2005.
Wow. I haven't heard BNI in years.
Yeah,
but they're there.
BNI is alive and well. And so BNI is an organization to where you are a member and your other members are there to give each other leads, right? So yes, I'll have relationships for those other 24 or 25 BNI members, but what I'm looking for is, who do those people know? Who do they know, right? So I'm tapping into looking to be introduced on raising capital from my local BNI members, introducing me to all those other people that they know. So the relationship comes first, and then I talk about the private money opportunity. Now, there's 3 categories of where you find private money. There's your own warm market, your network that you already have a relationship with. Then there's your expanded warm market. How do you grow your network? Like I was just talking about through BNI, Rotary Club, Chamber of Commerce, etc. And then the third category is existing private lenders. These are individuals, ordinary people that are already loaning money out. Well, the question is, how do you find those people? Well, did you know over 70% of account holders at self-directed IRA companies want to loan you money as a real estate investor? And so you can go to networking events of self-directed IRA companies. But guess what? When you're talking to those existing private lenders that have accounts at the self-directed IRA company, you're not putting on your teacher hat. They already know what private money is. So now you're not teaching an opportunity, you're having a negotiation conversation. A lot of those people are accustomed to getting 12%. I'm not talking to them, but some of them are happy with 7 and 8%. I'm talking with them. So I much rather do business with people that are in my own network, my own expanded network, because I'm getting to expose them to an opportunity that in all likelihood they never heard of before.
I love it. Love it. Let me give you a little something I like. You obviously you've been to conventions before, real estate
Many.
conventions and ever. Okay. And usually like you gone places where you stay at the hotel, right? The convention. So after the convention, where do people usually hang out and network?
Well, some of them hang out at the bar.
Exactly. So I'll tell you a story what I did about 7 years ago. So what I do is I go to those networking events that are not real estate related. So I had a situation, I live in Boca Raton. There's a cardiac physician convention that was being held in Miami at the Ritz-Carlton. I can't get into that convention because I'm not a physician. Guess where I went? Hung out at the lobby bar. End up having conversations. And the conversation I was having was like, "Oh, what do you do?" You know, we started talking. "Oh, I'm investing in real estate. I do real estate. Oh, I love to get in real estate. I just don't have the time." Well, ding, ding, ding. When they say I love real estate, I just don't have the time. That's where you come in and step in. I ended up raising $475,000 being at that event just because of it. So I like going to events that are not real estate related, but high net worth individual related to conferences just like that.
That's brilliant. Brilliant.
Yep.
Well, you know, somebody once said the more money you wallow in, the more money sticks to you.
It's true. I mean, look at where I'm at in Boca Raton. I mean, there's so much money everywhere. Like, look at your local business owners, your restaurants that you go to, people that you see and you know, they all have capital and they always want to put capital to work and they want to diversify it.
Absolutely. Absolutely.
I like it. That's great stuff. So, Jay, like, what else is like, is there a question that I did not ask you that I should have asked?
Well, one thing that comes to mind is, well, we sort of touched on it. Most real estate investors think you got to pitch a deal. They think you got to sell the deal. And when you do this in the order that I'm talking about, there is no pitching or selling. You're just delivering and providing on what you promised from when you shared and taught the program. Sometimes real estate investors that are new to raising capital, they have in their mind, they have a fear of rejection. Fear of rejection. So let me ask a question.
100%.
How can you have a fear of rejection if you're not asking anybody for anything? You're teaching the opportunity. You know, my mind's, people ask me, they say, "Jay, how do I start raising capital? What's the first thing I need to do?" I said, I can tell you the first thing you need to do. You need to own the real estate between your ears. And what I mean by that is having the right mindset of you're not asking, begging, chasing, selling. You're serving. You're a teacher. When I have a conversation with a potential private lender, my only objective, I only got one objective, and that is to leave them with more value than they had and more education than they had than before the conversation started. That's it. That's called a win-win scenario. And so you can let that fear of rejection go when you're coming from a standpoint of service, being a teacher, educating, and don't come from that mindset of scarcity of, I've got to have it. And when you don't have a deal attached to that money conversation, it makes it so much easier.
You hit the nail on the head, and that's what most people have. And I'm going to back you up on this. It is the mindset. It's like you are giving them an opportunity. So you have to change your mindset. And there's a lot of people want to be a part of that opportunity. They just don't know because you're not educating them like what Jay's saying. You got to educate and have those conversations. And once people start seeing, you're going to have people lining up when they see other people and they start telling their friends, oh, I did a deal with Jay or Mark and look at the return I got. And actually, I want to redeploy my capital back into it. So your deals that you're doing, are they more like short term or long term, the capital that you're putting your private capital to work in?
That's a great question, because private money on single family houses, it can be short term or it can be long term. What's interesting, I mentioned a moment ago, I've been paying my private lenders 8% all these years. At the local bank right down the street, 2 weeks ago, a commercial loan to get a single family house to be a landlord for long term, 8.3%. I'm paying my private lenders 8%, which is less than the commercial rate. So you can use private money for short term for a flip. Most of my flips typically take 6 months to 9 months to get them totally renovated. Sometimes they'll sit there 3 months before I get one of my general contractors to it. And so 6 months, 9 months, short term. Or I've sold a lot of houses on lease purchase, rent to own, and helped the rent to own lease purchase buyer get ready for a mortgage. Well, that might take 18 months. But as long as I can bring in more per month for rent than my underlying debt to my private lender, private money works for long term as well.
Love it. So I love that. That's definitely that goes back to some good old Ron days. So, so we like you make the money up front, you like the cash flow, and you like the money at the back end. That's the beauty of it. And when you have the capital there, it's so much easier to kind of do it. So, Jay, this is awesome. So how can people reach out to you?
Well, the best way to reach out to me and continue the conversation is, Mark, I'd love to give your audience a free gift that I just recently finished writing. Sometimes real estate investors say, Jay, how do I start a conversation? Like, how do I get into the conversation of private money with a individual? And so I wrote this private money script that I have used for years. It's called the Curiosity Opener, the Curiosity Opener script. And it's a PDF. You can download it for free, and you can get it at jayconner.com/scripts. And that's plural, jayconner.com/scripts. You can download that free PDF. If you like what you see, then that will open up the world to I've got $1 million script collection, 11 different private money scripts. And that's a great way for us to start a conversation.
Jay, this is great. You always need capital partners, or not just capital partners. You always need access to capital. And some of the larger stuff, once you learn a lot of this basic stuff and they become the bank, you can open the doors up to even larger, different, more deals. But you always need capital. You always need a network. You always need the people. In real estate investors, you always need a team. In capital partners or private lenders instead of capital partners, really private lenders is really, you need to have a Rolodex and treat them just like your sellers. Like all my private capital people, I have set up in my CRM. I have notes in there, conversations. So, and I treat them like I have one for my sellers, one for capital partners, and you want to treat them the same. Always reach out to your capital partners, even if you haven't done a deal with them for several months. You keep in touch with them. Keep in touch, because you're going to need these people when you get deals that come right in. You want to move quickly because you're going to have more capital than you know what to do with.
Well, that's the truth. There's more money than there are deals.
It's true. Jay, thank you so much. And again, Jay, one more time, how can people reach out to you?
Yeah, go to www.jayconner.com/scripts for that free private money script PDF you can download.
Right. Thank you guys again for watching another episode of Real Estate Power Play. If you like what you hear, please like, share, and if there's anything that you would like us to talk about, please comment below, and we're looking forward. Take care, guys.